Welcome to this week's Rapid Recap. I'm Sasha Evdokov. It is September 10th, 2015, and today's lesson is why is the first $1 million harder to earn than the second $1 million in the stock market? And this concept can be applied to not just the stock market, but also apply to general life concepts. A lot of the examples that we discuss in videos and topics that I really aim for is I focus on core material or core principles. And the reason behind that is that when you learn the principle, you can apply it to other aspects in your life. If you learn a technique or tactic, then you can only apply it to that situation. But when you learn a principle, when you learn how things work, function, operate, you can apply it to so many other avenues in your life. So in this example, or in this week's recap, this week's lesson, we're going to focus on growth, on how to grow from $1 million to $2 million. If you're talking about, even $10,000 to $20,000, again, the concepts and the principles that we will be discussing will still apply. You can put any number you want in this week's recap. It's about growth and why that first amount of money, cash, or the first thing that you're doing is more difficult to achieve than the next stage or the second part of that. So, looking at the market this week, we did have some interesting things that happened in the market, and we're going to go over some stocks and some of the things that I'm trading, holding, some of the things that I see in the market. We've had some great rapid recaps over the last couple of weeks. I had some really positive comments, some fantastic nicknames that people even gave me because of the wonderful advice that we've been sharing. But really, it's about you. It's about taking your edge to that next level. It's about taking your education and knowledge higher. So looking at the market overall, we basically were looking at these markets and talking about a few potential possibilities. Now, some of the possibilities that I discussed was that the market could bounce up here and then reject at this level, in which case I would add to the short position. Some of the other things that we said was it could come up here, break through this level, and then isolate here. Now, we didn't get any of those situations. In fact, the market didn't have enough juice or enough energy to even get up to this level. So instead, what happened was we got to this region right here, and every time we're coming back to this level, it keeps rejecting higher prices. So if we zoom in, you can see that right here, here's our trend line. Here's our resistance line. So you can see that right here, we come up to it. We reject it once. We reject it the next day. Then we isolate here for a little bit, a few days. We come back up, retest it, and reject it again. So all these things are telling me that we're building cause for lower prices. And the individual stocks as well tell me this. Now, things can change. I'm using this line right here as a stop or a line in the sand. And if you look at the S&P on the weekly, the same concept, looking at it, the same principles apply with the S&P. So here, when you look at it, the overall market, what it's doing is after that initial break, we have that additional volatility. The stocks are going up, and then they're rejecting at that level. And even when we have bullish days or somewhat bullish days, you can see that this bullish day didn't really do too much. These few bullish days were just retracements from this huge sell-off. Okay, same thing here. This bullish day, we had a slight little pop, but then the next day we had the stock going up or the market going up and then sold back off. That's why you have this doji. And here on this day, we had the market open right a little bit higher, popped higher, and then reject higher prices. So it's heading up and then rejecting. So every indicator is telling me the signals of what the energy is doing, that the market is setting up for lower prices. Now, with that being said, I do have individual stocks that I personally watch. I don't really worry about the overall market. It's in my analysis. It's in my focus, and I do implement it into my trades. But really, in the end, you can still be a fantastic trader or make a great profit, even if the market is bullish and you're trading bearish. Or if the market is bearish and you're trading to the upside, you can still do just fine, so long as that you are in your individual picks on the right side of the trade. So with that being said, looking at these individual names, let's just go back to Apple. We talked about Apple a handful of times, and you can see that this is our line in the sand right here, that line that we're watching and looking, and you can see that every time we get to this level, we are rejecting it. Okay. Now, we talked about this stock heavily. We talked about it extensively throughout since May, since March. We've been talking about it for a good amount of time. And when this stock showed you key signals, such as this one, and then the breaks here of that moving average as well, it's showing you its hand. Now, after doing my analysis, I'm not going to go in depth on this stock now. I try to limit my focus on this stock because there's other stocks out there and we cover it pretty in depth. But you only need a few picks in your arsenal. So if you have a few great trades a year, this makes your year. And this is the one. This one is the one that can make your year and made our year right here. So when you go to the upside and you start looking how far this moved, this is the ABCD pattern. We talked about this ABCD pattern. So A to B, B to C, C to D. And now when we look at our projected move, the projected target for this stock of the sell-off is right around the 87, 88 level. And I got that through the Fibonacci numbers. And if you have the course, review the Fibonacci on the green course or the blue technical analysis course. It'll tell you right there, that's the projected retracement amount. And that's where you're watching for a potential bounce, because there may not be anything wrong with this stock, but for the time being, it's a great short trade or a trade to the downside. Okay. Looking at GoPro, we've talked about this one quite a bit as well, and some of you have been clapping for me on this one, and you're welcome. So here, looking at this one, we looked at this little isolation area right here, this little region where we were rejecting. After that sell-off, that stock has been going lower. Now, we talked about this level where if the stock comes here and it bounces, you want to wait. You want to wait till it comes maybe halfway or comes back to this level and then rejects it. But it didn't do that. Instead, we're actually breaking lower. So now what can happen to this stock? Well, if we do our A to B, B to C movement, it's actually a little tough to do it on this chart, but here's our A to B, B to C, C to D. So I would have to readjust this chart to really get a good grasp. But here, the measured move is about 60 points. So from here, we're already at 65. 60 points would be at a $5, $6 level. Am I thinking it's going to go that low? No, probably not, because over here, the move was overinflated or overextended. But could it potentially get to half of that? Let's say 20, 30 points? Yeah, it possibly could. Let's just say we go 40 points from the swing point, and that would put us at the $20 level. So, you got to be mindful that whether it's a GoPro or an Apple, you can't get attached to these stocks. And a lot of people do. They get in love with their stocks, and you just can't do that, because notice what's happening. Notice what it's doing, what the movement. All these people that were in love in this region right now at the $50 level because it was bouncing. Now, if they're still holding on to it, it's down at 33, which is a good haircut off of their initial prices. So they're probably right now thinking, but it's GoPro, it'll be fine. They're talking themselves back into the trade. And unfortunately, if you're doing that in this business, that just doesn't work out. I mean, just take a look at Yahoo here with the explosion over here in 2013 that we had. I mean, this stock, even back years ago, was very popular, famous, and exploded to the 200s. But here, looking at this, here it is over here. And then we had a split over there too. So here, looking at 2013, how much of an explosion we had, about 160%, but now it's selling off. I mean, once people are done with it, they're done. We were at the $50 level. Now we're at the 30. That's almost half of where it was. And if it breaks this moving average, I mean, it could come back right here, the 20, 25. I mean, that's a fair price, right? It's kind of like buying a car. What's a fair price for a new Nissan? Is it $100,000? Probably not. But, $20,000, $30,000 is right around the fair price. And what about Yahoo? Same thing. Is $60, $55, a little extended? Maybe. So you start looking at things like that, in terms of the fundamentals, if you start looking at the fundamentals. Okay. So looking at some other stocks, we'll get into that in a second. But what I want to do is really just discuss the concept of making your first million versus your second million in the stock market. And if you want to change the numbers, you could say making your first 1,000 versus your second 1,000, or making your first 10,000 versus your second 10,000. I want to apply this lesson to the markets and give you some insight to why it's always more difficult to earn that first batch of cash or money, or earn that first million, than it is to earn the second million. And it has to do with one particular thing. It has to do with one particular thing in life, and that is really due to your personal habits. And habits have to be different between your first million and your second million. And the examples I want to give you in this is when we apply it to business. So if we apply this concept to business, which is a little bit easier to maybe understand or relate to for some people. If you're looking at business, creating a business, that first million to get your business started, to hire the employees, to get your website going, to build up your clientele is much more difficult because you are at ground zero. It's like a space shuttle, right? You're at ground zero. But when you have all the employees, when you have the website, when you have other things in motions, your product pipelines, your wholesalers, everybody that's working for you to continue to build all these things into the future for your company to grow, the second million now is a lot less difficult because it's like a train. Things are already moving and are in motion because your habits are different. Your foundation is different. If we apply this to, let's say, losing 5 pounds, the first 5 pounds are much more difficult to lose than 5 pounds in the future once you're already going to the gym, once you're already running every day, and once you already found a trainer. But if you're not going to the gym, if you're not exercising, if you don't have a personal trainer, and you don't have the habits to be able to lose that additional weight, then it's going to be much more difficult to lose that first 5 pounds. But once you already have all those things in place, you already have a trainer, you're going to the gym, you have all the necessary habits of going every single day or every other day, it's a lot easier to lose that next 5 pounds or 10 pounds because you have the habits in place. Okay, so think of this when you apply these same concepts to the stock market. If you don't have the right habits to earn the $2 million or the second million dollars, it's going to be much more difficult. You have to first earn the habits. You have to earn the rituals that are in place. And habits sometimes might be a worse word. There's a better word, and ritual just sounds even more powerful than a habit. And from personal development world, they like to use the word ritual. So if you had better rituals that positioned you to the next level, that allowed you to be better rather than making things easier, or focus on becoming better, then everything else falls in place. And how do you really do that? How do you put these rituals in place? Well, I mean, there's a couple of basic things if you look on the exterior of what you're doing. For example, maybe set up a video camera and see how you're reacting, or write down how you're feeling after you're making the trade, before you're making the trade, and during the trade. So you have those three concepts, those three little stages of before, during, and after. And if your emotions are swaying your decision-making process or the way that you're trading, then your emotions or your ability to focus on the core system that you're trading is probably the first thing that you need to work out and figure out. So there's going to be obstacles and barriers, and we don't have time to get into all these different things, but if you, in the back of your mind, think about the habits, the rituals that you need to have in place, then it's going to start getting your brain to think about all these things, and it's going to start looking at all these things a lot differently. You're going to be able to start looking at these stocks and saying, okay, I'm going to enter this stock 10,000 shares to the short side, and I'm confident about it, rather than, well, I'm unsure, I'm doubting myself, maybe I'll just trade 5 shares or 10 shares. And that's okay when you're getting started. But when you have the right habits in place, the right rituals in place, when you have that system in place, all of a sudden your system, everything else that goes along with it, puts everything in place. So hopefully that makes sense to you. If you're trading, if you're just applying this to general life, is that having those right things in place will allow you to move forward in developing you to that next stage. Now, the beauty behind these habits, these rituals and systems, once you have them in place, even if you lose all your money, whether you give it away, you buy a house, you do something different, right? And now you're starting back from zero or scratch, let's just say. When you already made that first million, you can make it back. You can make it back a lot easier because you already know the system, you know the process, you have the right habits and the right rituals in place, and it's a lot easier to position yourself in the future and make it back. I think Jim Rohn mentioned it where he said that, if you lose all your money and you have all the right assets in place, you have the right systems, all the other habits in place, that you can make your money back. In either case, let's take a look at some other stocks here. Let's take a look at here, Facebook. And a lot of these stocks, they're doing very similar things that all the other stocks are doing, especially these leading companies. So if we have Facebook, you can see that this line is also coming into this level, similar to Apple. Here we have this gap. You could move it up a little bit right here to the upper part of the gap. And if it comes back to this gap level and rejects it, then again, it's a shorting opportunity. But you want to be mindful that these things can whip you around. So if you're not positioned higher, if you didn't take profits into strength down here, when you shorted it here, then be mindful. Be mindful that these things can snap back. If we look at CMG, looking at this long trend line, it's isolating in that level. It's isolating. And potentially, when you look at the daily here, if I break things down on the daily and extend it, let's just extend the volume. You can see that this volume to the downside was 339,000 shares. And to the upside, we popped with 209,000 shares. The day before was 241,000 before the sell-off. So looking at these bars right here, this bearish volume at this price level is coming in. And you can see the rejection also right here on 827, which also kind of puts a little damper. You can see that this one right here, stock pops up, sells back off. Stock pops up, sells back off. So we have all these points where even though the stock will pop a little bit higher of this level, so it's popping about $8, giving you, $8, $10 stop and wiggle room that you have to do. But then it whipsaws back $17, $18. And that's huge. That's huge. Are you willing to give an $8 stop? Yeah, well, if the potential for the sell-off right here, if we have a potential sell-off of 70 points, yeah, of course, you have to look at things in perspective. It's a $700 stock. Okay, looking at Baba. Remember the good old days when people were screaming to buy this one right over here? Stock powering higher. And although it would have been fine for a short-term play right here because you had your ABCD pattern. Here it is. For those of you that have the courses, you can see here we have A to B, B to C, C to D. And then after this ABCD pattern is done, what happens? Usually a pullback, consolidation pattern, or something else. So in our case, well, a sell-off. And if we continue looking at it on the weekly, we're kind of creating an ABCD pattern to the downside. Okay, so take a look at it here. Can you spot the ABCD pattern? There it is. A to B, B to C, C to D, right? So there it is. And this stock, it's pushing to the downside. And for those people that were hoping to get in at 93, well, you can buy it cheaper now if you're still hoping for that price level. It's a lot cheaper, but my opinion, the stock's heading lower. Watch out below. If it breaks back above 80 at this point, on heavy volume to the upside, and we have a nice pattern, nice consolidation, then things may change. But for the time being, I don't see a positive sign in this stock. MasterCard, the stock's a pretty powerful company. You want to be careful because these pullbacks oftentimes are just shorter term when it does pull back, and then it'll pop higher. But there's nothing wrong with playing these slight retracements, and it can pull back and retrace. Projecting could be right around this 81 level if it continues to accelerate. And you can see that right here, we're acting weak the last couple of days in MasterCard. So be mindful there. Stick to your stops, and but this one has a tendency to pull out of dips because it's a powerful stock. Trip still building for lower prices potentially. We're looking at this line as a line of support. And that line, if that line gets broken, you could see lower prices. We came to it a couple times, 1, 2, 3, a handful of times right there. So watch it closely. If it breaks, look out below. Again, to step into your position, Monsanto. Looking at this one on the long term, I think I posted this one in the critical charts. Looking good for lower prices. Potentially, this stock could get to right around here, 87 on the price level. And you can see how that lines up right here for this upper part of this support and resistance level. So we already touched it once, but 87 is what you're watching. If it breaks that, we can get down to the 78 region. So watch this one on those price levels. But right now it's acting weak, and we're on the monthly here looking at this stock. So if we continue to pick up, well, you can see much lower prices. This one's not favorable in the community. Only because of the things that the company's doing. And then we got Yum Brands here. We have this resistance and support line. Look at the weekly. There's a swing point. Here's another swing point. And then there we go, draw it across. If we look at it on the daily, here it is. Here's the daily. Here's the swing point. Here's the swing point. Here was the break with a slight little gap there. Then you can see it broke here. As we zoom into this region, into today or current day, you can see that we broke there. Here's that 200-day moving average, rejecting here, and again, rejecting here. So you could almost say that it's building this cause right here, a little pattern, so that way we can potentially break lower. So be very careful. This one, I would not step into it unless it broke this 82 or 83 region. I wouldn't even look at it unless it broke that level, but it's because it's building for lower prices. And if it's building for lower prices and it pops higher, then you want to be extra careful because it's not doing what you expect it to do. Okay, it's about reading those signs. And Sunni, great. Short, working out well. Here we go. Draw that line across. We know it's targeted and pushing to the short side because all this overhead supply that we have in this level. This stock pops just slightly, and if you draw it down here, you can see that it basically, it doesn't even get that far, but it aimed for the 38.2 region is what it tried to do. If we go over here, you can see that it came up to this 23.6 region, but that's not really a good sign or clue of it. Really looking at it, you got too much overhead supply and a small, let me see if I can do this right here. Okay, so here's our swing point. There's our low. There it is. Okay, aimed for, 38.2. Didn't even get there. Okay, got to right around the 36% level, 33 level, rejected higher prices. And if we combine it with, watch this, you're going to love this. Okay, we combine this with an ABCD pattern, okay? A to B, B to C, C to D. After that light retracement ABCD pattern finishes, boom, took it out. This is the weekly, looking at it on the daily. There it is. What do I see? Look at the volume bars, extend it. If you can't see it, extend it. Look at this cluster right here. So here's our volume bars. Here's our group of bearish volumes. Here's the first one, second one. The bullish one that we have, the only one right there is at that point, and one back here. Look at all the other bearish ones that we have. So, and looking at it, boom, more bearish volumes. We have one green one on the pop. I could tell you what this chart does just by looking at the volume, and that's how you should be as well when looking at volume. You should be able to see the chart when you just look at the volume. So here it is. We popped a little bit, and now again, we're starting our second leg on the sell-off. Lock, we talked about it in 2014, the end of 2014. This was creating, what were we looking at here? This A to B, B to C, C to D pattern. So we talked about this one. I just want to mention it here. You can see, again, panned out beautifully. A to B, B to C. I talked about this B to C. Wait for the break. Stock broke right here. There was your short. We did a little retracement again, and boom. There it is. Finally built up after a year. There was your move. There was your play if you got in it right there. That's 50% gain or 8 points. If you did it in 2 steps or 2 parts, you would have a little gain here and then probably got out around this region or this level. And then again, waiting for the retracement, got in again for the short, and boom, get out now, take your profits, run, go home, enjoy the beach, go play tennis, go play golf, spend some time with the family, grab a bite to eat, whatever it is. And there you go. That's what you do. All right. So I hope you enjoyed this week's recap. Remember that it comes down to habits, building the right habits, building the right rituals in place. So that way, that second part, the second part of your growth, internal growth, is easier. It's always easier to earn the second million than the first million. It's always easier to earn the second $1,000 than the first $1,000 because you already know how to do it. It's always easier the second day or fifth day or 20th day on the job than the first day on the job because you have to learn the processes. You have to learn the connections. You have to get in touch with people. So that way you can continue to grow for the future. If you're trying to lose weight, this concept applies to all aspects of life. First 5 pounds is harder to lose than the second 5 pounds because you have things in place. If you're driving a car, building a business, if you're looking to build your nest egg or trade on the stock market, that first bit of cash, the first stage, is always more difficult because you have to set the right things in place. Hope you guys had a great Labor Day weekend. Things here have been going pretty well. I've been working on the book for the penny stock traders out there. So we have this book that we're working on, almost finished with this book. We'll have a couple of weeks of proofing it, of course, just to look over some of the charts, but it's nearly there. And, that'll be the last book probably in the series for the time being. I don't know. I don't see any other books for the time being. Maybe there might be one in the future, but this will be the last product for the stock market that I'm doing this year, with the exception of the monster options course. And depending on how many DVDs, how long the production time, and with the holiday season we're going to have in that, I'd love to get it out before the end of the year. It just takes months to build the options course, months upon months, just planning it. And it's a large process, but it's worth it because of the feedback that I get from you guys when you're learning. When I get these success stories, I love hearing from you guys, and it's just remarkable. So we're definitely going to make one of the largest options courses out there in terms of content. I really hope it to be the best for quite some time. And right after this book is released, that is going to be the last stock market product of the year that I'll be working on. It will be the options course, and it might be released, early next year of 2016, just depending on the holidays and how the holiday breaks go, because the holidays usually are more time constrained. And the reason for that is also because of the market, because I have to watch the market as well. And if you don't know why the holidays are a little bit more time constrained, looking at Apple, looking at Facebook, any of the trades you do, all these trades, the best activity and the best time for the market is usually between Thanksgiving and January, February. So usually those are those holiday months, and that's usually the best time to trade. So if trading picks up, then it may take me a little bit longer to do the options course, but I do want to get it out. That is going to be my next project right after this book is launched, and this book will be coming out at the end of this month or early next month. And after that, that's it. My main focus is the options course, and it will be big. It will be great. But really, it's not about what I think of it. It's about what you're going to get out of it, and how much value I can pack in it for you. So that's my goal, is just to make it a great course for your education. So thanks again for joining me, for spending your time, investing your time with me. And hopefully you got a lot out of this week's lesson. And I will see you next week. Enjoy your weekend. Spend some time with the family. And get ready to learn again next week on the Rapid Recap.